Jonathan Segal, there's an old adage or feeling on Wall Street that steaks and stocks go up and down together. So what are you seeing right now at the One Group Hospitality with regard to your STK restaurants?
So if we look back at 2014, last year, the last quarter, we reported over 5% same-store sales growth. The first quarter of this year, we've been a little bit soft. We had some pretty bad weather here. But in generality, you're right. There's a great deal of buoyancy in the steakhouse business. The thing about the steakhouse business is it's safe. Everybody knows what they're going to get. They know what it's going to taste like pretty much. And so it kind of remains constant in the American mind.
So what differentiates STK steakhouses from your competitors?
So we're actually remarkably different. Our slogan is not your daddy's steakhouse. We're not a traditional steakhouse. We reinvented the steakhouse market. We have DJs in our steakhouses, not because we're a club. We have DJs because we read the room and play the right music to the demographic of people that are there, so they become more engaged. Our restaurants are built around the bar. The bar is the most social aspect of any restaurant, and if you can create that energy from the bar and let it dissipate within the room, then you'll have a much more vibe-driven experience. And that really is what STK is about. It's about a vibe-driven experience. It's a great meal in an environment which is less formal, more casual and more relaxed.
And how many restaurants do you have now? How many do you plan to have by year end?
Well, we have two divisions in our company. We have our restaurant division, which has STK and STK Rebel, and then we have our hospitality division, where we go in and we operate venues for hotels. We currently have 11 STKs, a total of 22 operating venues, and by the end of this year will actually increase by 52%, and our venue count will go from 22 to 34 venues.
Now, can you comment a little bit more about STK Rebel? It's like a boutique steakhouse, right?
STK Rebel is kind of a mini STK. You know, everything that happens in STK happens in STK Rebel. The main difference is the box is a little bit smaller. The average STK is about 10,000 square feet. An STK Rebel will be 5,000 to 6,000. STKs pretty much only open for dinner. Rebels will open for lunch and for dinner. And most importantly, the price point's less. The average spend per head in a STK is about $127. The average spend in a Rebel will be about $55 to $60. And it really is designed for the smaller cities. So it enables us to take the STK brand into cities that maybe not be able to cater for a 10,000 square foot restaurant.
And speaking of prices, are you finding you have to pay your labor more? We're seeing it on the low end. Are those higher wages creeping up to the high end? And also if you can comment on the price of steak.
So let's just talk about commodities. We're pretty good buyers. We forward buy a lot of our product. In 2014, we saw a big increase in commodity costs. Our commodity costs actually dropped from 26.3% down to about 25.9%. So even in a year where we were seeing increase, we managed to reduce our commodity costs. And we're pretty confident about maintaining about 26 to 26.5% for 2015, mostly through forward purchasing and forward buying. As far as labor costs do increase. A lot of our labor are on our tip staff as well, and obviously the better the service, the more the income they're going to generate, and our employees actually do pretty well with tip labor. But we follow the rules on minimum wage and all of that. So, but it is creeping up, and we're okay with that because ultimately the prices start to creep up, and it keeps the balance. Now,
I mentioned at the start that when you see a bull market in stocks, you see more steakhouses and more crowded steakhouses here in Manhattan. You know, that said, when it comes to publicly traded steakhouses, it's been a mixed record. You had Morton's get taken out by Landry's, Smith & Wollensky no longer trades. You do trade publicly. You're not a lot of volume now, but you think you're going to be listing on the NASDAQ soon. What are the benefits to being publicly listed?
So we went public through a reverse merger in November 2013. And at that point, we were a small private company. We had difficulty accessing capital, being in the restaurant business. And so one of the things that we knew that it was going to do for us was open doors for the capital. But there was a much more important point for us. We trade internationally. We're expanding rapidly into Europe now. And by having a US listing, it gives us the credibility internationally. Also, within our hotel hospitality program, we're working with some pretty major companies, including W Hotels, Starwood, ME Hotels, Amelia. And so by being a public company, it gives us the credibility to be able to walk into these companies and talk meaningfully about what we do. And they have complete access to everything. We file, obviously, everything with the SEC. Everything is public. And that really checks the box of credibility when dealing internationally and also, to some degree, dealing nationally here in America.
Thanks a lot, Jonathan.
That's great. Thank you.
And thank you for watching The Street.